Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. Last time I said that gold would be going higher, but that hasn't panned out yet. You can see that it has actually broken this resistance at 1840 and it's now at 1800. So probably this will just bounce higher and then we will see where we go. I think that the technicals still are pointing to a bounce here, consolidation, bouncing above this 1,800 line, and then we will go higher. So let's take a look at the data. The gold forecaster index, the latest data point says that we are weakening, but when we look at the history, we see that this is still very high. So the power of growing, so the growth power is still very high. So I think that gold will continue higher. But I'm on yellow alert now because we see a little dip here in the gold forecast index. If this continues to dip lower in the coming months, then I might change my opinion. But I think the trend is still looking very okay here. But I'm on yellow alert. The Taylor rule rate, we got a new data point here, is going up. So this is positive for gold. The misery index, which is unemployment plus consumer price index, is now going back higher. I think the unemployment rate will not go down that fast, and we will see higher CPI later this year. So this will probably move higher. Real output was very bad in Q4. So you can see here that real output, this is a minus sign, is above zero. So that means that real output is declining. And every time when we see real output declining, you can see that inflation will start to move higher. Look at this correlation. Every time when this blue line goes positive, then you see inflation going higher. And this is what I expect. I expect that inflation will go to 1.5 to 2% at the end of the year. And that's good for gold. USGS, we have new numbers here, and I will talk about that later. GLD gold demand has been going down. That's also why we saw gold declining. So I think the economy is doing better than before. So people don't have any fear anymore and they go into stocks. So the demand in gold has been going down. At the COMEX, it's different. We see that here the demand is going higher. Latest data from China says that Chinese demand is going higher. So the latest numbers were very good. We are still at the top demand here. So the Chinese are now starting to buy gold. SLV demand, we knew that there was a short squeeze interest in SLV with Wall Street bets, and you can see here how the SLV stock level is shooting upwards. So this is very positive for silver. I expect higher silver prices. Uh, the retail silver bullion dealers are all sold out. They have massive premiums. We will get to that. Chinese demand for silver inventories here is still at a high level. US mint sales very high. And this is what I wanted to talk about, the premiums on silver. have skyrocketed again to 55% right now at Apex. Okay, we have had higher premiums than this, but this is historically very high. So probably these will have to come down again, these premiums, and the only way to do that is to push up the silver price. China premiums are back at the historic level. That's very good. This tells me that Chinese demand is coming back. Gold premiums on Canadian maple leaves, very high. I think they are sold out today. So you cannot buy any Canadian maple leaf anymore at Apex. So that's also very positive. PSLV premiums have gone positive. So that's also very good. Uh, COT report was not that good. You can see that there are still a lot of shorts here. So they need to cover their shorts. The lease rates were actually very good. Let's take a look. So the gold lease rates are moving higher. That means that there is backwardation almost. If this gets above the zero line, then we have backwardation. Then I expect gold to move higher. So this is actually bottoming out and will move higher in the second half of this year. Same for silver. Look at this. This spike upwards in lease rates means that we have backwardation. Then they pushed the silver price back down, JP Morgan, and silver crashed again. So this is really manipulation by JP Morgan. But in the end, this will not work. The physical is out of stock right now. Let's take a look at some other data. The tips yields moving higher. Look at this. The green one is not moving that high, but the blue one is still moving high. So gold should actually be somewhere here at 1890. But they have managed to push it down to below 1800 in an effort to get the weak hands out. But I expect this to rebound soon. Now we are now in February, going into March, so the gold seasonality is not that good. So I think there are buying opportunities in these 2 months here. The same for silver. March is not that great for silver. So the technicals I have told that we are still in consolidation phase and then we will move higher. Also wanted to talk a bit about the stock market today. You can see here that the stock market is going much higher. We are still at this level. We could easily go up 10-20% from here into next year. You need to always check the forward earnings. Look at this. Earnings are moving higher also for the next year, 22. Earnings are going higher. Operating margins are increasing. So I don't see any reason to get out of the stock market. Everything looks great. Maybe not for the middle class, but for the corporations, everything is looking very good here. Look, even the PEs have come down. Even the PE ratios are coming down. So stocks are actually cheaper now than a week before. Yeah, all going up. And here you see that it's at PE of 20. Still very high, of course, but bond yields are very low. And this is also very interesting to look at. You can see which sector is doing the best. And the best sector is information technology, Apple, Amazon, Google. So those are doing the best. Also energy, this green line here is doing very good energy. So you can buy, for example, Shell or ExxonMobil. What's doing less good are the consumer staples. This is going down. And also financials are very nice. Financials are going higher. You can buy JP Morgan or Citigroup. Okay. So let's look at the dollar. So the dollar is still expected to decline. We have a little bump here, which is also visible now here on this recent rise in the dollar. But overall, we are still in negative territory here. So I expect the dollar to remain weak in the future. Money supply still increasing, not that fast anymore, but we are rising still. So there is inflation. Central bank balance sheets also rising. Not that fast. I had expected to see some more growth in the balance sheet, but yeah, we're not seeing it right now. Hopefully this will increase faster because otherwise we will need to rethink our positions. The deficits were increasing. As you can see here, the services went down. Also, the goods deficit uh, trend is still moving lower. A little bit of a bump higher, but overall the trend is still lower. Small bump here, but the trend is lower. And this gap has not closed yet. So this is the import-export gap. So yeah, deficits will stay, and that's bad for the dollar. Capacity utilization was up, so this will tell us that inflation will be higher. And here also you can see the producer prices are rising. We are actually in a plus now. So year over year, producer prices are positive again. So this tells me that inflation will probably come later on because producer prices are a leading indicator for consumer prices. Because producers will increase their price later on and push it to the consumer when they see that their costs are going higher. So I expect a higher consumer price later this year. So let's take a look at the USGS report of silver. So each year they report the silver reserves and production. And we see that for 2020, the reserves and production were declining. So I will just show you this chart here. So these are the silver reserves. And you can see that they have been declining in 2020, especially for uh, Poland. This is Poland, and this is Peru. So Peru and Poland saw a decline in reserves. Production has also come down from 26,500 tons to 25,000 tons. So this could be an effect from the COVID-19, of course. Let's see what 2021 brings. Maybe it rebounds or it can go down even more. Who knows? But this is typically a very good sign for silver. If we see less production, then silver will go higher. And reserves at this pace, this will go to zero in about 20 years. So you can read this report. Um, Wanted to mention also the China power consumption, which is still moving higher. So this is a V-shaped recovery. Latest numbers are very high, almost a record. So this tells me that commodities are the place to be, and you can buy things like Sibane Stillwater, Vale, Capstone Mining. So these things will do very well because China needs a lot of commodities to grow. GDP was also very high at 6%. It has crashed and now it's back at 6%. So all is looking very well for the economy. The last chart wanted to show this that the US dollar is in decline. So the latest point here in Q3 of 2020, claims in US dollars has hit 60%. So the US dollar is still the reserve currency, but it is in a declining trend. And you can see that the Japanese yen is increasing and the euro is stable at 20%. So to conclude here, I think that gold is bottoming out still. We need to be wary about the gold forecaster index because this is going down, probably because the economy is doing so well and interest is waning in the gold space. But I think that yeah, we need to check what the Federal Reserve is going to do with the balance sheet. We see that the balance sheet is not moving higher at this point. So we need to look at all those data that will be coming in. But overall, I think we are still bottoming out in gold and it will move higher by the end of the year. And I'll see you in the next video.